The $1,000,000 question. Coca-Cola or Pepsi? Coca-Cola or Pepsi? The battle is now! Alright folks, there's a lot of discussion on which one's better. You know, they are in the exact same space. Everybody knows what Coca-Cola and Pepsi are. I do not have to explain this to you. You know, they're household names. Like I said in one of my other videos, one of my friends went to a surf trip to Madagascar off the coast of Africa, and the only Americanized product he could find was Coca-Cola. You know, no McDonald's, no Budweiser, just Coca-Cola. There was no Pepsi there. I might let you say what's a little bit more worldwide. They're both very similar in different areas. They both have a similar market cap. Coke's just a little bit higher. The price per earnings ratio, Coke's a little bit better. It's around 22, whereas Pepsi was 28. If anything, this recent crash, so-called crash we had with the COVID, it hurt Coca-Cola a little bit more than it hurt Pepsi, which makes Coca-Cola a little bit better of a buying opportunity. You know, another thing you got to compare the two is what is their dividend payment, and it's a little bit higher with Coca-Cola. Coca-Cola is around 3.5. Pepsi's been in the high 2s. So, you know, you're gonna have to, if you're gonna weigh out that two, it's obviously Coca-Cola. So, you know, they are close in a lot of categories. But, you know, I just named 3 different categories, and Coca-Cola was the winner in all 3 of those categories. But human mentality, people want to buy Coca-Cola because it's cheaper. It seems like it's a better deal. You know, just because Coca-Cola's in the 50s and Pepsi's in the 120s, they say, oh, I could get 2 Coca-Colas for the price of 1 Pepsi. Even though that share of Pepsi might be worth twice as much. That's why people say, oh, it makes no sense. But at the same time, human mentality is human mentality. And Coca-Cola, more people are buying it right now. It's also, Coca-Cola is one of Warren Buffett's top holding. So I mean, that guy doesn't lose money. He makes 20% a year. He's been doing it for 50 years. And there's got to be a reason why he spent so much money to get Coca-Cola. And after all that's happened with this COVID, he wasn't selling. Nope, still holding strong. Now, like I said, either of these are good buys. I personally, full disclosure, don't own any Pepsi right now. I may buy some down the line if there's a little bit more of a dip, but right now I really like where Coca-Cola's at. I feel like it's a great deal. There's not that many great deals left. You know, it's been just rallying ever since March. It just went woo and then right back up, and it's been going strong ever since. With that being said, though, I still think Coca-Cola is a good deal. I'm still buying right now. In my opinion, it's one of the few, you know, low risk, good dividends that are left. Even though 3.5% is not like that good of a dividend, it's okay. But I feel like there's still growth in Coca-Cola. It's not going anywhere. It's a household name. People in every continent are drinking it. So they're going to continue to push growth, and until people in the world decide that they want to be healthy and not drink this horrible syrup, it's gonna continue to do well. You know, if you want to buy Pepsi as well, it's that same case. It's got a good dividend. It's going to continue to go up. I think both are good buys, but in my personal opinion, I'm buying Coca-Cola right now. That's where I'm looking at. I just feel like they have a lot of potential to continue to grow. So, you know, and just now that we got that out of the way, I just want to remind everyone that it's very important to continue to accumulate dividend stocks. I had someone in my Facebook group say, oh, well, it's only peanuts, the dividend payments. Yes, it is only peanuts if you have a little bit. The key here is to put 30, 40, 50, 60% of your income into these, and then it won't be a little bit. Once you have $100,000 worth of dividend stocks, if you're getting 7% a year, that's $7 grand a year. That's like getting, you know, that's like getting a $7,000 raise a year. How many of you wouldn't want a $7,000 raise just because you put a little bit of money to the side for a few years? Now, you might say, oh, a little bit of money to the side, 100,000 is a lot of money. It's going to take me years. Yeah, but there's other ways to, you know, get a second hustle and just take all that money and put it in there. You can get $100,000 together in 3 years. You absolutely can. And then once that happens, it's like you just gave yourself a $7,000 a year raise for life. And that's going to continue to compound. It'll be $7,000 the first year. Next year it'll compound a little more. It might be worth, I don't feel like doing the math, but you know, it might be worth $7,500. Next year it'll be $8,500. It keeps going up, keeps going up. Because when you get the dividend payments, you shouldn't spend it. You should put it back, buy more. Continue to grow your portfolio. Because the key here is to get to $1 million. And then if you're getting 7% of $1 million, it's $70,000 a year. Then you can retire on that. You know, this is about getting freedom. You want passive income freedom. Or as Braveheart would say, freedom! So that's all I got for now. Make sure you like this video, leave it a comment, and most importantly, smash that subscribe button so you get these awesome videos every single week and your life will get better. I guarantee it. I feel it.